Alright, let's see if we can use what we just learned to write the income statement for Johnny's Lemonade Stand. This is a template of a regular income statement for a business. At the top here, you can see that we start with the revenues. Revenues include all of the money that comes into the business as a result of business operations. For Johnny's Lemonade Stand, we had net sales of $40. We didn't have anything else, so we can leave those blank, which meant we received total revenues of $40. Under cost of goods sold, we have to remember that the lemons cost $20, which means that it cost us $20 for the goods sold. In this case, all the other ones don't apply, so we can leave them at zero, which means the total cost and expenses were $20. For net income, we can relate that back to revenue minus expenses. So net income is equal to revenue minus expenses, which in this case would be $40 minus $20, which leaves us with $20. Alright, now let's see if we can apply everything we learned into a real life example. This is the balance sheet for Papa John's International. If you start with the top here, you can see that again, the assets are listed first. Under current assets, we see all of Papa John's current assets, including cash, accounts receivable, supplies, prepaid expenses, and other. These are things that, for some of them, we are familiar with, based on what we just talked about. So as we can see here, Papa John's had total assets of $403,000. On the right side, we see that Papa John's had liabilities of $274,000, as well as total stockholders' equity of $129,000. If we add them together, we see that total liabilities and stockholders' equity equals $403,000, which means that assets end up equaling liabilities plus stockholders' equity. Now, an important thing I'd like to point out now is that this balance sheet is for January 31st, 2009. The balance sheet is a snapshot of your financial position at a specific date. This isn't for the year 2009, this isn't for the month of January, this is for the day ended January 31st, 2009. So when you're reviewing balance sheets or looking at balance sheets, you have to remember that it is for a specific day at a specific time, not an increasing or a period of time. On the other hand, if we look at Papa John's income statement, you can see that this is actually for the month ended January 31st, 2009. This income statement is an ongoing tally of everything that happened during the month. So again, we start with revenues over here, and we also have our expenses over here. Now, Papa John's also has other items that are listed right over here. But the overall concept is the same. For our net income, we have our total revenues minus our total expenses, and then just adding on a few of the other items to get our net income. Pretty simple, right? Thank you again for watching. I hope you enjoyed it and you learned something. This is only one video out of our large library of other financial and marketing based videos, so please do check out all of them and learn something from them. If you have any questions, feel free to leave a comment below or email any one of us directly from aceconsultinggroup.ca.